M&A heats up in the streaming and royalties sector. Ian Ball is former head of Abitibi Royalties before his company became part of David Garofalo's Gold Royalty and an all-share deal announced last year. Ian, it's great to have you back.
Thank you, Michael. Thank you for having us on Kiko, or having me on Kiko.
Ian, we're going to get to the royalty and streaming sector in a moment, but maybe we should just talk about this sell-off. NASDAQ is off by about 1/3 year to date. Bitcoin roughly the same.
Yeah, it's interesting. I think if you were to ask an investor with an average level of IQ, could the NASDAQ have sold off? I think most people, if they were being honest with themselves, probably would have thought that a couple of the companies were overvalued. I think the bigger question was nobody knew if they would keep going higher or when it would actually end. But I don't think anybody should be or is realistically surprised by the sell-off that we're seeing, especially in some of the tech names. But when you look at Bitcoin or the other cryptocurrencies, they were deemed to be an alternative to the US dollar, another form of money or alternative to gold. And I don't think they're performing that function very well. When you're having 10, 20, 30, 40% fluctuations in some of these coins on a daily basis, you have a very hard case to say that they're money. It's not to say they might not go higher or go lower from here, but I don't think they're actually serving the function that they were designed to be, which is as a form of currency that you could use day to day to purchase items and to transact. So I think yesterday was a clear indication that cryptocurrencies are failing their primary duty.
I'm just wondering if this is a reset. I mean, look, it's been devastating on the crypto side for some of the people that were gangbusters on it. But I think it's fair to say that in last year and the year before that Bitcoin really did kind of take the shine off of precious metals.
Yeah, I think money was flowing into crypto that would flow into gold. But gold has a very long track record, and what happens on a year-to-year basis, I don't think impacts the fundamentals of gold whatsoever. Because in my view, gold is still the ultimate form of money. It served that role for thousands of years, and I think gold, in the face of an extremely strong U.S. dollar, I think gold has been performing as it probably should be. And I think there's a very strong case that gold is probably undervalued today. When you look at the M2 money supply, you can make a case that gold is probably undervalued by about $400 an ounce. When is that going to change? That's a very hard question. But I think gold at $1,800, I think, it's at a pretty key support level. But I think you'd be very hard pressed to say that gold is not undervalued today. And once the US dollar probably starts to come off here, you probably should see gold rally, I would think.
Now we're starting to see inflation become a real problem. We saw that with the financials that came out from Argonaut. Certainly the mining CEOs are getting questions about that, and we see that creeping into their production costs. This is a time for the royalties and streamers to shine in this environment, Ian.
Well, to your point on the inflation, mining gets hit on every side of inflation. So whether it's labor, it's power, it's consumables, mining faces pressures on multiple. And when you look at the royalty side, yes, they are insulated from those inflationary pressures. And that's why a lot of people have said the royalty companies are the better way to play the gold space. And I don't disagree. There's always been a theory that, in a rising gold market, you should buy a high cost producing mine because they're going to have greater margin expansion than a low cost mine. The problem is a high cost mine tends to stay very high cost because the costs are just going up as quickly as the gold price. So when you're looking at the sector, I've always been a big believer that gold tends to outperform the senior gold companies anyway. So that's usually a pretty safe place to play. The royalty companies I've always liked, but I think as a generalist investor, you're probably better off just buying the ETF, the GLD, the JDX, because trying to pick a singular company, even people who are in the know in the industry tend to get one out of every two wrong. So as a generalist, I think it's better off just to buy the basket rather than focusing on any particular company.
Well, maybe there'll be fewer pickings that you have to do in the royalty and streaming space. There has been some consolidation. Sandstorm acquired Nomad in a $755 million all-share deal. Your Abitibi went to a gold royalty. Is the streaming and royalty sector facing competitive pressures? Is it just kind of a desire to kind of get scale?
Well, it's an interesting question because you hear a lot of commentary from people in the industry that all of a sudden there's too many royalty companies. But I think it's very important to understand the context of the royalty sector. If you think back to when it was started, you had Franco-Nevada and Royal Gold in the 90s. And today you have many more players. You have Wheaton Precious Metals, you have Osisko, and as you mentioned, you have Gold Royalty, as well as many other entrants. But what people are failing to recognize is that in the 90s or early 2000s, streaming and selling a royalty to finance a mine was not a viable option. It was never even discussed in the same equation of equity or debt via hedging. And so today, there's not a mine being built that's not at least considering a royalty or a stream as part of their financing package. So I would agree with your comment that, yes, there's more competition, obviously, within the royalty space. But I would argue there's also a lot more opportunity than what existed 15, 20, 25 years ago. And I think the royalty companies are going to become an even larger part of making mining viable going forward from a financing perspective, because we're not seeing the equity markets really opening and up to the mining companies like they used to. So I think the royalty companies are going to be a very key part of this industry for a very long time to come. So I think there's a lot of opportunity out there for those companies.
One of the major themes that is in mining just has to do with energy transition and whether there's just going to be enough metals to meet it. From your experience that building these mines are a very long process. Is there any tech out there? Is there any innovation out there that you see that we're going to be able to meet demand in terms of getting more copper, getting more nickel, getting all of these battery metals, available?
Well, I would say if you look at, because you are right, everyone's talking about these shortages of metal. And, we've heard this before when it comes to a shortage of oil. We've been hearing this for the last 30, 40 years, and we've heard about peak gold. Neither one of them has materialized. And I think there's a lot of smart people in the mining industry that are going to be able to figure this out. And I think when it comes to your comment on moving these projects forward, you're already seeing a number of governments declaring these metals to be strategic for their future. And I think you're going to see a lot of these projects get fast-tracked by governments to meet the needs. But I'm very confident the industry is up for it and that we do have the resources to meet the needs, and that there is going to be support by the governments to see these move into production. So I would say I'm highly confident the mining industry is going to meet the demand that's out there.
If you talk to people in the precious metal space, especially in the junior space, they're going to say that there is a lot of sales going on. Now, you did talk earlier about, the concerns about if you're a generalist, you might want to look at a broader index just because that allows you to be safe. But look, you ran a single royalty company. You had success there. You had an 80% compound return during your tenure from 2014 to 2021. If you're taking a punt, if you're kicking tires on a resource company, what would you tell that retail investor to look for?
Well, a couple of things. The things that I look for, but it's kind of like Haley's Comet. It doesn't come around every day, but I do like, and I give you two examples, Goldcorp with Red Lake, and then you had Fosterville with Kirkland Lake Gold. If you can find a company that is mining and that is able to find a much higher grade discovery that they can process through their existing infrastructure, you're going to see the rate of returns balloon drastically. Now, that doesn't happen very often, but when you do, I would say grab onto it. The second I would say is look for management teams that treat their shareholders friendly. You could have the best mine in the world, but if it's not run for the shareholders, that still could end up very poorly. And I would say look for management teams that have a track record of delivering shareholder successes, because there is a lot of luck involved in this industry. but there's also a lot of skill as well. And so I think if you can combine those ingredients together, it's no guarantee for success, but it's certainly starting to tip the odds in your favor than not.
Ian, what's next for you?
Well, that's a good question. After Abitibi, I do sit on the board of one company. It's called Brixton Metals. It has a joint venture with Robert Friedland's Ivanhoe Electric in Montana, as well as having projects in BC's Golden Triangle. I have been nominated to stand as a director for McEwen Mining, and that's at the end that shareholders meeting is at the end of June. So we'll see if shareholders vote in favor of that. I have also started a very small enterprise with Rob McEwen that is private. But in terms of material next steps in my own career, I would say that my views on how to run a mining company might be considered a bit extreme. And so I don't know if they really mesh with what a lot of boards are looking for. So I would say in the near term, there's probably nothing for me in the mining sector, at least publicly, in the public domain. But never say never. But like I said, my views tend to be pretty extreme, and maybe they'll be the right fit, but there's currently not one.
Let's press on extremes, but you were always pounding it in terms of driving down costs, returning returning any gains back to the shareholders, Ian.
Yeah, that my extreme, like I said, I took it to the extreme. No stock options within the company. Using all of your compensation to buy shares in the open market like every other shareholder. We had the smallest at the Abitibi Royalties. We had the least amount of shares outstanding of any mining company in the world. These are things that any mining company can do, just most choose not to do it. And that's where I said my views, I tend to always look at it. I work for the shareholder. They don't work for me. And like I said, those views are pretty extreme, and I accept that. So, but that's I always want to be a partner with the shareholders. I don't want, if I lose or if I win, I want to make sure that our interests are the same. And there probably will be opportunities out there like that again, but just to run a mining company for the sake of running a mining company and collecting a salary has no interest for me.
Ian, as those opportunities come out, please keep Kitco apprised.
Thank you. I certainly will do that.
Ian Ball is a former head of Abitibi Royalties. My name is Michael McRae, and you're watching Kitco Mining.